If you like to use moving averages, I have a great video for you. Hey, you guys, what's going on? My name is Shaquan. I am your Forex coach, and I am here to talk to you about moving averages. I like using moving averages on my chart because to me, it's like a little bit of white noise. So it's kind of like if you're a person who likes to work in silence, but you need a little background music in order to help you calm your nerves. It's kind of what moving averages to me. The moving averages that I'm using are the EMA 10 and then the SMA 21. Now, the reasons why I am using these two moving averages is because they measure price for me bi-weekly and then monthly. When I'm using the EMA 10, it's measuring the present 10 candlesticks as they close to help me know if price is going up or if it's going down. And the closer price is to my blue EMA, the stronger that trend is. Now, when I have my SMA 21, that smooth moving average, it's measuring the last 21 candlesticks that have closed. So it's basically measuring the overall flow of price action on this specific time frame. I'm on a 24-hour time frame, and it does work on like a 12-hour time frame, 4-hour time frame as well. And this is very important because when I think of the number 10, I think of bi-weekly, which means the trading days, right? And then when I think of 21, I think of, well, we have about 21 to 22 trading days. And so it's basically measuring the last month of movement for me for every 21 candlesticks. So it's a little chronological. When we get into the price chart, I'm on a 24-hour time frame. I want you to notice two things. One is the space in between the moving averages. Anytime you're using more than one moving average and you have them measuring the current flow of price, the further away these moving averages are, the stronger your trend. And so, for example, every time you see there is space in between my moving averages, like in this example, the price was going up. In this example, the price is going down. In this example, the price is going up. In this example, the price is going up. This means that there is a strong trend. When price is also close to my EMA, the blue EMA line, then you can see that price is in that continuous uptrend. It's below, it's in that continuous downtrend. Now, some of y'all may ask me about crosses. I don't care too much about crosses personally because crosses can mean that, yes, the trend is going to go the other way or there's a little bit of indecision. I'm more so focused on the space or the flow of the market. So let's look at some examples. In this previous situation here, you may have seen me talk about this area on the price chart. We can see that price is between the two moving averages. Now, it doesn't matter for me if price is between the moving averages or below the moving averages because what's always going to matter to me first is the flow of price by itself. And y'all know what I love to use. I love to use my price note tools. This is always going to tell me the flow of price way before an indicator is going to tell me the flow of price. I like to use my eyes first. I think you should use your eyes first. Your eyes are very wonderful and unique. We can use those. The next thing that I'm going to notice is also where I want to enter my trade. And y'all know how I am with my zones, with my lines. If you've been watching for a while, you know I like to keep my chart simple. But what's really important is that if you look, in case you're a person who likes to look at the crosses, if you look, there is distance in between these moving averages, which means that the trend being down was actually a strong down trend. And the fact that price is staying underneath the smooth moving average is actually very important. So when we got this new low, price comes up into my zone, I can sell this and have confidence in the trade as long as price can stay below both of my moving averages. Okay, same thing. If I could catch trades in between, in the middle of this beautiful quiet market, this bear quiet market, we can have confidence because this is a strong trend. Look how as price was going down, the distance or the space between the moving averages actually got wider. And this is what you want to see. So we can see the same thing here. When the distance in between the moving averages started to close, there was something happening. And using the price note tool once again, we can see that there was a reversal here on pound USD. Now, fast forward to a few weeks later, we can see that price is back in the uptrend. Moving averages have crossed, but what is most important is the distance in between these two moving averages. This is a very, very strong trend. This is a very, very strong uptrend. You can also see that price is above the blue EMA, which means this is a really, really good trend that's going on right now. Currently, it's a buyer's market. So as long as price stays above this blue EMA, especially if you're a person who likes to trade moving averages, it's actually really good for you to take note and for you to see, because as long as price keeps making these higher highs and higher lows, it's going to stick close to that blue EMA, and that way you can have a little bit more confidence that you can actually trade your EMAs or stay in your trade. So I hope you like this. This is just a really quick video over moving averages. Moving averages really aren't hard to understand. They can help you stay in your trades. They can help you see if there is a strong trend or not. Just don't get too caught up in all of those crosses, okay? If you use those price notes tools, you should be fine. I'll talk to you guys in the next video.